Medical Properties Trust stock, ticker symbol MPW. This stock is down almost 74% on the 1-year chart, underperforming the S&P 500 big time. Most recently, the stock took a hit of 29%. On the 26th of October, MPW reported earnings with a beat on FFO but a miss on revenue. And people still love MPW stock because of multiple reasons, one of the main things being the dividend. And I understand why, with dividend yield at 18%, but the growth record doesn't look any good. And if we look at the past 5 years, I think this graph says it all. This is including dividends, and MPW delivered a minus 72% return while the S&P 500 is sitting at 100% return. But could this be the perfect time to buy MPW stock? Well, by the end of the video I'll give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And more importantly, which price target is the most justified in my opinion. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does MPW do? Medical Properties Trust is a healthcare facility REIT. The company owns and leases healthcare facilities. The vast majority of medical's revenue is generated in the United States. And when we check the recent earnings report, we see that MPW reported a net income per share of $0.19, down from $0.37 last year. A major drop in net income per share. FFO was reported at 0.36 versus 0.42 in 2022. So this is one of the most important numbers with REITs, and it is dropping, which is something that I don't like. But it is looking better than the net income. Another important number to me is the net debt to EBITDA. I prefer a range of 5.5 to 6.5. MPW is sitting at 6.7, so this number doesn't look any good either. It has to be said that it's pretty close to the range. General acute care hospital is by far the biggest segment, representing 72% of the total revenue. Behavioral health facilities is representing 15.7%. So in terms of diversification, it doesn't look that great. But to be honest, I do like the niche focus they have, so I'm not worried at all about this diversification. And if we check the operator breakdown, we see the Steward Healthcare is the biggest operator. I would prefer a bit more diversification here. Roughly 67% of the revenue is coming from the United States, and UK is second with 26%. To me, this looks really good. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. MPW is a 1.95 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at 2, indicating they might be undervalued. Later in this video I will show you my 3 price targets for MPW stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. And in the meantime, please let me know your thoughts on the current valuation on MPW. And I'm also interested to hear your thoughts in general on this company. Revenue is at 1.37 billion, and in this graph we see that revenue went up in the long run. Ever since 2022 the revenue is coming down a lot. That's something to keep your eye on for sure. We see that margins are going down over a longer period of time, and as of right now it is sitting at a negative number, which is a red flag to me. EPS is showing similar trends as the margins and the revenue. Definitely keep an eye on this number as well. Analysis expects that from here EPS will increase quite a lot in 2024. However, in 2025 they expect the number to stay more or less the same. For the revenue, it is looking also very interesting, with no growth expectations up until 2028. Return on assets is sitting at 3.3%, which is a low number for a REIT. Return on equity is looking really bad, and the most important number, return on invested capital, is sitting at 2.2%, which is a low number, even for a REIT. It is also lower than the 5-year average, so that's something that doesn't look any good either. Current ratio is at 3.52, which is a bit on the high side. But given the current situation this company is in, I think this is not too bad. Nevertheless, keep an eye on this number, because you don't want to increase more from here. Right now, MPW has 10 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. MPW has 340 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. And to be honest, this could be a potential red flag to me. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is surprisingly going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 18%, which is an insane number of course. Annual payout is at $0.6 and payout ratio is at only 60%, which is below the 75% average for REITs. The 5-year growth rate is at a negative 2.5%, which is not a good sign, and there's no years in dividend growth either. And here we see the dividends paid since 2012, and to me this looks pretty good up until 2023. This was the moment where MPW decided to cut the dividend by 24%. In my opinion, the right move, but it still hurts to see this was necessary. In this graph we see the expected dividends in 2024 and 2025. Of course this is an estimation that can be highly impacted by results, but it gives you a rough indication. It's expected to stay around current levels, so again, not looking any good. And overall these dividends look pretty interesting to me, but how about the historical returns? I decided to compare MPW stock with the overall market, in this case the S&P 500. Next to that I added CTRE. On the 5-year chart we see that MPW returned minus 72%, and keep in mind this is including dividends, so you lost a lot of money on this stock. CTR returned 32%, also underperforming the S&P 500 big time. That had a 100% return. On the 1-year chart it looks pretty much the same with a minus 70% return for MPW, while the S&P 500 is sitting at 23% return. On the 6-month chart it is again the S&P 500 that is having the highest return with almost 8% versus minus 66% for MPW. On the 1-month chart it is the S&P 500 with the highest return again. All the others are seeing again a negative return, but MPW is really the worst here with minus 32%. So bottom line, the S&P 500 was by far the better investment in the past 5 years. But with the stock being hammered down a lot, it could be an opportunity. So, is this the perfect time to buy MPW stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with the revenue growth. For the revenue growth I'm filling in minus 2%, 1% and 4, based on historical performance, their own outlook, but also because of the analysis. And to be honest, this is the first time that I put in a negative number here. For the profit margin I'm filling in 0, 5 and 10%, and for the free cash flow margin I'm putting in 36, 40 and 44%. For the PE ratio I'm putting in 20 since it is a REIT, and for the price to free cash flow I'm putting in 3, 4 and 5. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now MPW stock is at $3.26. I hit analyze and we see a few green numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $4, we have a mid price target of $5.5, and we have a high price target of $7.5. To me, the low price target is the most justified here, indicating that this stock could be undervalued. However, I can't stress enough that this could be a dangerous investment, so even when the numbers are showing some upward potential, I think the risk is simply just too high. But please let me know the price target that you think is the most justified here in the comments down below. My final conclusion on this stock is that it doesn't look any good for the coming years. Of course, I can sum up everything up again in this chapter, but I think I made my point in the previous chapters more than enough. The high risk might not be worth the reward, so for now I'm skipping this stock and keep analyzing them from time to see where the company is heading. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.